I'm Tim Gardner, Wealth Manager with Chatham Wealth Management. Let's say you just inherited an IRA, and if you handle the withdrawals incorrectly, the resulting tax spike can crush your tax bracket and slash your kids' college financial aid eligibility if you start wrong in year one. Picture this. I got a call last year. Tim, my dad left me his IRA. What do we do with this? The client was thinking windfall. I was thinking two traps. I've spent 3 decades watching this cost people real money. Here's the reality. If your parent was already taking required minimum distributions and you're an adult child beneficiary, you do not get total flexibility. You see, under the IRS regulations, you must empty that inherited IRA within 10 years and take distributions every single year along the way. Skip year one, the math's going to punish you. Let me show you the real numbers. Say you inherited $300,000 and leave it alone, assuming an illustrative 8% gross annual growth rate. Now you have to empty that, and that layers on top of your paycheck. You're not just paying tax, you're paying tax at the highest rate in one single year. That one forced distribution can spike your Medicare premiums. Remember, IRMA is a cliff, not a ramp. It can kill your Roth conversion possibilities and slash your kids' college financial aid eligibility. That forced income lives in the crack, the one between the person that manages your money and the person who files your taxes. And for most people, those two people have never spoken. And if you're doing this while trying to keep your own retirement on track, that's exactly what we do for our clients. Keep in mind, if your parent was not taking distributions yet, you have more flexibility. I'll link that video below. Today, we're just going to solve the forced distribution case. So what you need to do is stop thinking windfall and start thinking decision tree. Your tree really has one move. Fill your buckets starting in year one. Timing here is everything. You have a floor and you got a ceiling. Your floor is your required distribution for the year. And you must take at least that. No exceptions. Your ceiling, on the other hand, is the top of the bracket you're in today. If you have room between the floor and the ceiling, fill it up. Take extra from the inherited IRA now, while you're still in this bracket. That's income you won't be forced to recognize later in year 10 at a much higher rate. Now, look at what happens when you smooth it out. In almost every scenario, spreading distributions over multiple years yields a far superior net tax outcome compared to swallowing the massive lump sum in year 10. Here's the bottom line. You look at the bracket you're in today, you respect the floor, and you use the room you have. Handle these three before December of the year following the death of your parent. Step 1, split it. Separate accounts must be set up by December 31st of the year following death. If you don't, everyone's required annual distributions get stuck using the oldest sibling's age instead of their own. Number 2, check whose schedule you're on. Your required amount for the inherited IRA runs on its own rules. Be sure to keep your own RMD picture clean, but know the inherited one is separate and out there. Step 3, don't miss the year of death requirement. If your parent had a distribution due in the year they passed and hadn't taken it yet, you have to take it. Miss it, and the penalty is 25%. 10% if you correct it quickly. That's under the Secure Act 2.0. Now stay with me to the end, because this integrated approach is where clients often unlock significant tax efficiency. You coordinate all your accounts, your IRA, your spouse's IRA, and the inherited one, so they fill just one picture for you. It's kind of like fitting together a puzzle. When your traditional IRA, your spouse's accounts, and the inherited IRA are aligned, your total tax burden becomes far more easier to manage. If you wait till year 10, that's toothpaste we're not going to be able to get back into the tube. And if you'd like personal guidance on this, use the link in the description to schedule a consultation. Together, we can build a plan that keeps your inherited IRA from becoming a tax time bomb. Thanks for watching. And I broke down how to coordinate Roth conversions with these distributions in the next video. Go ahead and watch it.
This is placeholder media that you'll see if you add a layout to an empty scene. You can go ahead and delete it.